What's up, Banter fam? I hope you're having a lovely morning. Today, I'm going to be discussing one Fantom catalyst that I think is going to have a major impact on the Fantom ecosystem and could potentially be a very, very good play. We've gotten some major updates in the Fantom ecosystem over the last few days, which suggests to me that potentially a rally could be coming, and I'll be explaining to you guys why I think that could be the case. It's going to be a massive show. Let's get straight into it. Before we get into everything Fantom, let's discuss what is happening in the markets right now, because it's been a very choppy last week or so. We can see that the Bitcoin price performed very strongly over the weekend. We had a rally up from 37.7K up to 42.2K over the last week or so, and that was really nice to see some strength coming back into the market. Unfortunately, this momentum didn't quite last. We have seen a 2% pullback in the Bitcoin price today because the volume on the weekend isn't very strong. So if we actually look at the volume, we could see that there wasn't much backing this pump on the weekend. And the main reason for that is that weekend pumps just usually can't be trusted. It's one rule in crypto that we always have to be a little bit skeptical of pumps on the weekend. Usually the market does sort itself out on a Monday, and that's what we're seeing today. But it's nice because even though we dipped down to 40,500, we are seeing a push up back past 41K right now, despite equity markets pointing downwards. So it's not a terrible sign or a position to be in right now. I actually had an interesting thought yesterday, and one of the major reasons why this Bitcoin rally was triggered was because of Luna. So the thought that I basically was thinking about is, imagine if having a Bitcoin reserve becomes the new standard for protocols. It would drive up the Bitcoin price, thus injecting alt valuations, which would give projects more buying power to purchase Bitcoin. So let me explain what I mean by this. Over the past week, we've seen a lot of buy volume come in for Bitcoin because of the recent Luna news. If you guys don't know, Luna is starting a Bitcoin Treasury. So they're backing their UST with a Bitcoin reserve as a monetary standard to back their UST. Now, I just had an interesting thought that potentially other projects in the future will be following Luna's path and potentially using Bitcoin as a monetary standard to back up their tokens. And this would essentially encourage new participants to come in and purchase Bitcoin, which would, one, drive up the Bitcoin price. But we all know that alts follow Bitcoin as well. So if the Bitcoin price goes up, the altcoins will go up, and that would give those projects more buying power to purchase Bitcoin. So it was just a little bit of speculation on my behalf, but potentially we are seeing a little bit of a shift here in Bitcoin becoming a monetary standard in crypto. It is just speculation at this point. However, I think it's something very interesting to note. If we do see this start playing out on other projects, it could be very bullish for the market as a whole. So just keep your eye on that. And Benjamin did tweet, he said, yes, the good old dump going into the weekly Bitcoin close. It always seems to happen after a nice weekend of pumpage. Usually on a Monday, we do come down a little bit because usually there isn't a lot of volume backing these pumps. So that's something to note. But there is one major metric that I am looking at right now that is kind of giving me faith in this market at the moment and at this current time, because we are seeing a real breaking down of the Bitcoin dominance right now. So let's go and we look at this dominance chart, and we can see it's actually declining quite steadily, down to 42.76%. So what the Bitcoin dominance coming down indicates to me is that the altcoins still have a lot of strength. So this market doesn't want to go risk off just yet. There is still a lot of strength underpinning these altcoins right now. I did draw these horizontal lines in. I'm not a big fan of the diagonal lines. That's more Sheldon's thing. I usually look at horizontals to see major levels of support and resistance. And we can see that if we look at this previous range of support and resistance, we can see that the dominance is now breaking under this horizontal line. And what this means is that we are seeing a shift in the market right now. We can see it's coming up and testing this line again, but the dominance breaking down is a good indicator that there is still strength in the market with these altcoins. And we can see this across the board with many alts not actually down as much as Bitcoin today, which was down a couple percent an hour ago, and a lot of the altcoins were still fairly flat. So that is a good sign to me, and we can see that people are still fairly risk on in crypto, and that is another big indicator for us to look at. But let's have a look at DeFi Llama, because whenever we are looking at crypto and trying to evaluate where the market is sitting, it's super important to go and look at how these markets in terms of DeFi are performing, because TVL in DeFi will be a major indicator to us of how the market is feeling in general. If the market was scared, a lot of liquidity may flow out of riskier protocols. If the market is confident, they may flow back into riskier protocols. So by looking at DeFi and looking at how the total value locked in the entire crypto ecosystem is evolving, gives us a much better indication of where the market is tracking as a whole. So let's look at that right now, because I think there are some interesting developments here. We can see that the total market cap is down 1%. The total TVL versus a Bitcoin price movement of minus 2%. So the DeFi Llama is actually holding up better than the Bitcoin price right now, which is interesting. And it indicates to me that the market is still relatively healthy. If we see a Bitcoin break to the upside, because the DeFi market is showing this relative strength, we could potentially see a major rally in this space. And what liquidity coming into DeFi will do is it will cause a lot of these lower cap tokens to explode in price. So obviously it's a big if. We obviously are relying on the Bitcoin price to show some positive price action for this scenario to play out. But it is interesting to note that over the past few weeks, we have seen positive relative strength from DeFi, and it's giving me a little bit of faith in this market right now, whereas a lot of people were losing confidence. But I'm still just looking at the metrics to determine what I am doing at the moment. But let's look at a few standouts, a few chains that have really been performing in the DeFi space to give us an idea of what narratives are hot right now. We obviously know that the Luna narrative is extremely hot, up 71% for the month. If we scroll down, we can see that there are multiple other protocols like Thorchain, which are also exploding, up 90% for the month. We can also go through and look at even ADA, which was up, I think, 30-40% for the month. So we are now seeing many of these major protocols exhibiting some strength. But today's video, I do want to focus on Fantom because it is a project that has been beaten down recently. A lot of the ecosystem tokens in the Fantom ecosystem have seen major drawdowns. And I don't want to cover things that are necessarily pumping. I think we have better opportunities in an ecosystem like Fantom right now because of the risk reward now that the price has come down. I want to make sure that you guys can maximize profits in this market. And the best way for me to do that is to show you upcoming alpha, like in today's video, show you what's happening on an ecosystem and giving you an idea of what could happen in the future rather than me just covering Luna again, which is already pumping. So I think today's video is especially valuable because I'll be showing you how to position yourself in the Fantom ecosystem so that when it does rally to the upside again, you guys are best positioned and we are all kind of in a very good position to benefit. And I have quite a lot of news that has recently come out with some of these major protocols, which is giving me an indication that the development is in a really positive space. So if we go back to this Fantom TVL right now, we can see that some of these projects are actually starting to show a little bit of strength. So we do see the Beethoven price up 9% in terms of TVL, not price, sorry. And we are also seeing the LiquidDriver TVL is up 13.4% of the week. So this is indicating to me that there is something happening on these chains. These chains that are positive despite the Fantom market cap dropping, it gives us a little bit of an insight into where of some of the liquidity is flowing. And in today's video, I'll be showing you why the liquidity is flowing there and how we can take advantage. There is some really interesting stuff that is happening in the ecosystem right now. So without further ado, let's discuss LiquidDriver, because I think LiquidDriver is really the pinnacle of Fantom DeFi right now. And there is a few things that are happening on LiquidDriver with new upgrades that are coming out in relation to V3 that I'm, one, super excited about, and two, think are offering a major opportunity to really capitalize on the Fantom ecosystem as a whole. So first, I want to recap what LiquidDriver actually is and what it does, because some of you may not know what LiquidDriver is. So I think it's important to start there, and then we'll go through the major updates that are happening on LiquidDriver at the moment. So LiquidDriver is basically a liquidity mining dApp. So it enables you to stake your ecosystem coins in the Fantom ecosystem and earn yield, which is paid out in the native governance token LQDR. LiquidDriver is doing something really interesting though, and we've seen this play out with the convex curve model, where LiquidDriver is actually going to other protocols on Fantom. It's buying up tokens. For example, it was buying up Spirit tokens, and it's using these tokens to get governance voting rights over on other platforms. So to think about it in a more simpler manner, LiquidDriver is buying voting power on other major dApps on Fantom like SpiritSwap. It's using that voting power to be able to boost its own pools, and then when it boosts its own pools, it can pay out amazing returns to LiquidDriver holders. And that is why the holders of xLQDR have been receiving 74% APR. And in the past, it's even been higher. It's been like 1 to 110%. Obviously, the LiquidDriver token has taken a slight hit, so the APR is a little bit lower, but At some points, this APR for LiquidDriver holders has been over 100%. But there are some massive changes that are coming to this LiquidDriver ecosystem, which I think are going to be game-changing and actually potentially set off a new Fantom rally. And I know that's a big call, but I'm going to justify why I think it could set off a new Fantom rally. Because what we're seeing develop here with the new V3 coming out is going to be absolutely massive. So I'd like to view LiquidDriver as kind of like an index fund. So if you want exposure to the Fantom ecosystem, LiquidDriver is great because what they do is they stake on SpiritSwap. They have been offering bribes on Beethoven, so you're getting exposure to both of them. They also have pools in Boo, SpookySwap, Spirit, and 100 Finance. So what being exposed to LiquidDriver does is it's essentially giving you an index fund style approach to the Fantom ecosystem. So by holding these LiquidDriver tokens, you actually are benefiting from the upside of the entire ecosystem and not just some of these individual tokens. I know it can be overwhelming in an ecosystem, so potentially this play for most people may make the most sense if you want exposure to this Fantom rally. Now, Justin Bebas, who was the developer of Reaper Farm, he's one of the biggest developers in the space. He made a big quote on Fantom Unchained, which is a Fantom podcast last week. He said LiquidDriver is low-key probably the best DeFi 2.0 protocol, period. They don't get a lot of attention because they are not on the Ethereum chain, but they are doing crazy stuff and it's just a matter of time at this point. That's what Justin Bebas said. He is one of the biggest developers on Fantom and he's obviously extremely bullish, and I would agree with him that we are seeing some changes coming to LiquidDriver, which we haven't really seen in the past with other protocols, even on Ethereum. So it is groundbreaking stuff. And if they can succeed on their mission here, I think that it is quite an advantageous play. And also anyone exposed to the Fantom ecosystem will now be benefiting because they're going to be setting precedent with some of these changes. So let's go through how to actually stake on LiquidDriver right now. And then let's talk about the changes that are happening with V3, because I think it's important to get context of what you can do now. And then we'll look at how the changes are going to affect that in a positive way. So right now you can farm on LiquidDriver. So if you have these LP tokens, you can come in and earn a very nice yield on some of these pools. They have pools that are across SpiritSwap, pools that are across SpookySwap, and also pools that are across Beethoven, 100 Finance, etc. Now, the yields here can be very advantageous. We can see that these Spirit pools are paying 70%, and we can also see that some of these Fantom stablecoin pools are paying 50% plus in LiquidDriver. So the yields on the farms are still probably the most competitive we have seen in the Fantom space. And the reason they're this competitive is because they are emitting LiquidDriver tokens. So if you stake in one of these pools, they are going to be paying you out in LiquidDriver, and obviously they are also earning the additional yield from the protocols that they are staking via these LPs. So you can earn quite a nice yield in the farms, but there are some issues with these farms. Now, a couple of the issues with the farms is that the LiquidDriver tokens are being constantly emitted. So there's no emissions cap on LiquidDriver, which means the token is being devalued. So some changes that are coming in are going to completely change this and change the amount of emissions being released. So there's less emissions, and so holders, LiquidDriver is worth more. So it's going to be very interesting to see these changes implemented. So the farms are definitely a way to be able to get exposure to that. At the moment, if you want exposure to the LiquidDriver token, xLQDR is how you do it. So you'll need to lock up your LiquidDriver tokens for a certain amount of time. In most cases, 2 years will give you the best rates. And what locking up these tokens enables you to do is get paid out the 74% APR, which is basically, as I was explaining before, when LiquidDriver goes and gets governance rights from a protocol like SpiritSwap, when they're earning yield and boosting their own pools, that extra yield that they're now accruing is paid out to xLQDR holders. So xLQDR holders are the ones that are going to be getting the exposure to the benefit here. But there are some new features coming out which is going to completely change this mechanism, because a lot of people don't want to be locking up their LQDR tokens for a large amount of time. So let's get straight into that news, because I think it is massive. LiquidDriver V3. This is the big news that I want to break to you guys today, and I'll be giving you my insight into the changes here and why I think it may be positive for the ecosystem, because LiquidDriver is really changing entirely how they operate, and I think it is going to add some interesting tokenomics to an already pretty successful ecosystem. So let's get straight into it. Launching V2 was an absolute game changer for LiquidDriver. We saw the TVL absolutely explode, and the LiquidDriver price went from, I think, $2 to over $50 at the height of V2. But V3 is going to be adding another element to this, and there are major changes coming which are going to be very impressive. The the first big change is a UI upgrade. Obviously, with all these new features coming into LiquidDriver, they're going to need to make the UI look nice, and they're going to need to make everything look comprehensive and easy to use. So their new UI will be very, very nice. They'll also be implementing some of the zapping features, which we can already see implemented. So V3 was happening in stages. They were implementing the zapping. I think that's already in. And they also were upgrading the UI, which is already gradually rolling out. But there's one big change which is yet to come. And this is something I'm very, very excited about. And I have to talk about to you guys today. And that is shadow farms. So shadow farms are kind of like auto compounding on LiquidDriver, but they have a few major differences which I think are going to be massive for the ecosystem. So unlike a normal auto compounder, what these farms are going to enable you to do is get exposure to vaults on other protocols. But instead of earning LP tokens, you'll be earning governance tokens. So what they're going to be doing is they're going to be rolling back the emissions by 40 to 50% across LiquidDriver. This means that the tokenomics of LQDR itself are going to be a lot better because there's less tokens being emitted in general, which means that it will become more sustainable long term. Emissions are very good for bootstrapping liquidity in crypto. We've seen it time and time again that when emissions are given out for projects, a lot of liquidity can flow into an ecosystem because there's a huge incentive, right? Like when LiquidDriver was paying those 100% APRs on Fantom USDC, there was a lot of incentive to come in and stake on LiquidDriver. But unfortunately, this is not sustainable long term. It's much more sustainable to go with a lower emissions approach and find new ways to be able to pay out yield. And this is exactly what they are doing through the shadow farms. So they're taking a more sustainable approach to attracting liquidity here. And this is exactly how it's going to work. So shadow farms are going to enable users to stake coins on SpiritSwap, SpookySwap, and Beats. They're going to be enabling you to stake these LPs, but instead of compounding an LP, you're going to now be compounding governance tokens. So what these strategies on these new shadow farms are going to do is they're going to take these rewards from your LPs that you stake. They're going to be compounding them multiple times a day, and they're going to be swapping these tokens that you're earning automatically into the governance tokens on the respective protocols. So we can see a very basic graphic of how this works. You deposit your LPs into the new LiquidDriver shadow farming vaults. You can then stake it. They will automatically stake it into the farms on Beethoven, SpiritSwap, and SpookySwap. They will then auto compound. But unlike a normal auto compounder, instead of receiving your yields back in LPs, they're going to be staking the yields back into these governance tokens. For example, Beethoven, Spirit, and Spooky. So you'll be earning XBOO, FBeats, and Lin Spirit. Now, this is quite advantageous in my opinion, because what it's going to do is it's going to be boosting the yields across multiple ecosystems, and it's going to put a lot of buy pressure on some of these tokens. So having more tokens staked across the Fantom ecosystem is a net positive for Fantom as a whole. And that's why I think if these shadow farms could really take off, it could be a benefit for the entire ecosystem as a whole, because it's giving people a new way to stake and earn yield on Fantom. So I think shadow farms are a big, big addition to the ecosystem as a whole, and it's really going to kickstart a new perspective on crypto, in my opinion. So this is coming out within the next few weeks, I think, and I think it's going to be massive because you guys are going to be able to earn yield in the Fantom ecosystem and stack these governance tokens. You will still be able to earn LQDR through this as well, but they are pulling back emissions to be able to benefit their holders more maximally. So I think it will be very, very important. But there is another big change coming. And I actually do want to show you one more thing to do with these shadow farms, by the way. So this is why it's so important. This is why the shadow farms are very advantageous versus normal staking. This is a simulation. So this is a graph that they're showing based on shadow farm yield, compounding yield. So if you were to stake based on a normal LP and you were compounding, say, on Reaper Farm, you'll be earning a nice, let's say, 25% on your tokens. Through shadow farming, though, since you're stacking these governance tokens and they're auto compounding through LiquidDriver, you'll be receiving closer to 75% based on a 25% yield here. So you actually earn a lot more yield through shadow farming than you would on normal farming. So that's why I think it's going to be massive for the ecosystem as a whole, because you'll be able to earn more yield on your tokens. And this is going to be a massive incentive for people to come in and shadow farm. It's a really, really cool idea. And I'll be doing a thread on it today because I think it is giving us a major opportunity to capitalize. And this is why I view LiquidDriver as basically the index fund of Fantom, because it's giving us a new look into how to stake on Fantom. But I do want to show you one massive change coming, and I think this is the even bigger change. Shadow farming is awesome. It will get a lot of liquidity into Fantom, but the next big change I want to talk to you about is FNFTs. Now, this is a feature that just rolled out on LiquidDriver, but we aren't seeing the full potential yet because there are many features to come out on LiquidDriver to flesh this out. Now, I know the concept of FNFTs is complicated, so I'm going to do my best to break this down today. But this is honestly giving us a much better alternative to staking LiquidDriver tokens, because the problem with LiquidDriver tokens is you've got to lock them up. FNFTs is giving us a chance to keep our yields relatively liquid and also earn great yield at the same time. So let's look at LiquidDriver, and I'll show you guys how to take advantage of these FNFTs and also how you can earn yield on this and potentially how it's changing the ecosystem as a whole. Because if this succeeds, you bet you other protocols on Fantom will start using this as a way to earn yield. So these FNFTs are very, very interesting. So basically, in a traditional sense, you can come in and you can stake your xLQDR in this traditional vault and you can earn yield. The problem is and a problem that I was finding as well, is that to earn this 73% APR, what you actually need to do is stake it for 2 years. The issue with staking it for 2 years is that your tokens are no longer liquid. And this is a big issue because what if you want to sell your tokens? What if you want to have this yield liquid? You can't really do anything because you're locked up in LiquidDriver and you're basically forced to write it out. Now, the major thing about FNFTs is it's giving you another option to still benefit from the same amount of yield, but then be able to keep your yield liquid at the same time. So LiquidDriver NFTs or FNFTs who were created by Reverse Finance, who take 1% of the LiquidDriver yields, and the other 99% for using their platform gets paid out to LiquidDriver holders. So what you can do is you can come in to the mint page on LiquidDriver instead of the traditional page, and you can put up LiquidDriver tokens, and you can choose a lock on these tokens. And for locking these tokens, you will actually get an NFT. And to view this NFT, it will pop up under the gallery. What this NFT actually enables you to do is sell it. For example, if you don't want to be in this position anymore, instead of holding your xLQDR locked up in a vault, you now have an NFT which can be sold on the secondary market. So it's more liquid than staking your xLQDR. But in terms of LiquidDriver, it still gives the benefit of locking up LiquidDriver tokens. So by more people staking their tokens as NFTs, it actually locks up more LiquidDriver tokens, which reduces the circulating supply. Now, I've got a great thread on this to be able to explain in a little more depth what this is in a second if you're lost, because I know it's a complicated topic, but Sounds Tricky did a great thread on this today, and it's going to help guide us through exactly how this works. Sounds Tricky is one of my researchers. He does a great job, so I highly recommend going and following him at Sounds Tricky to check out some of his content. He's been posting amazing graphics on how to benefit from the Fantom ecosystem. His content's great. So he says, sometimes in life you need to make a decision, settle down and live a life of devotion, or stay footloose and fancy free. But now thanks to LiquidDriver and FNFTs, you can do both, and here is how to do it. I think this is a really revolutionary idea, guys. So you want to wrap your head around this because it could have some massive ramifications in crypto. For those of you that don't know, the only way to earn yield on LiquidDriver right now is locking up your LiquidDriver for a couple years. But obviously there is a major caveat. There's a pro and a con to this. The number one is that locking your LiquidDriver for 2 years means you can earn rewards. So that is a pro. However, that means obviously now you can't access to these tokens. So that is a con. And this is obviously a conundrum that myself and a lot of other people have been facing because we want exposure to LiquidDriver, but locking them up is frustrating because it means that we can't have access to our tokens. But this is kind of the new change that's coming in. And this is why I think these FNFTs are a big change. So in its most simple form, it's creating an FNFT on LiquidDriver, kind of like creating a casual relationship. All the rewards, none of the commitment. So you're getting exposure to the rewards, but you can now sell these FNFTs on the secondary market. This is because you can sell them at any time, cashing out your position with no strings attached, which I think it's really cool. This is a potential strategy that you guys can use to get advantage from these LiquidDriver tokens. So the thing is, if you lock up your FNFTs for say 2 years, what is going to be happening is you can't get your LQDR back for 2 years because they're locked in an NFT. But what Sounds Tricky kind of came up with as an idea here is actually locking up your LiquidDriver tokens in multiple NFTs. So here's an example for you guys to be able to take advantage of these NFTs. Let's say you have 100 LiquidDriver tokens. What you can do is you can create 5 NFTs. You can lock up 20% for 6 months, 20% for a year, 20% for 2 years, and he locks up another 40% for 2 years as well. But you have different positions now that you can create to be able to have the power to choose whether to sell these positions at different intervals. For example, if you have one of these FNFTs and you decide after 6 months you don't want it anymore, you'll actually receive your LiquidDriver back instead of locking it up for 2 years. But keeping some in the full lock enables you to keep access to these NFTs, which I think is a very positive thing as well. So this is just one potential scenario that's on this thread, but there is multiple options that are now going to be coming out from this secondary market. So as the secondary market grows, and if you guys don't know, the major NFT trading platform on Fantom is PaintSwap. I'm expecting to see LiquidDriver FNFTs being sold at a discount so people can move out of their positions. So what might happen is that if you have an FNFT and you have your yield locked up in that NFT, you might want to sell that NFT. But if there's a lot of sell pressure, for example, if the market's panicking, what you may be able to do as an investor, and this is a massive opportunity, is pick up these NFTs on the secondary market as an arbitrage. And then you'll be earning the same amount of yield as locking at LQDR yourself, but you'll be getting it as a discount. So if someone has locked up for 2 years and they want to exit their position early, they may undercut the floor price of these NFTs. But this opens up an arb opportunity because you can come in on the secondary market and scoop up these NFTs, and then you earn the difference because you'll be earning the same amount of yield as someone that locked up their tokens, but you're buying it for less. And this is why Sounds Tricky is currently so bullish on LQDR, because as it stands, there are 7.6 million LQDR locked for an average of 621 days. But once people start to understand how these FNFTs work and how much flexibility this will induce from being able to sell them on the secondary market, this will increase the amount of LiquidDriver locked up, therefore reducing the circulating supply. So I think this is very good because a lot of people in the past have been hesitant to enter into LiquidDriver because you have to stake it. Now with these NFTs, it's opening up a new way for you to get exposure to the LiquidDriver yields, but not being locked into your position. So it's kind of like a stock, right? Because in the traditional sense of a stock, you may be buying a stock based on the future yield that stock can produce. So if you have a dividend paying stock, you know that it's going to be paying you based on a company's history, a certain percentage over the next few years. It's similar with these NFTs. You know that these NFTs are going to be paying out a certain amount of percentage over a few years. So then what it gives you the opportunity to do is buy these NFTs as a stock, and you can get good value for them if you're buying them on the secondary market. Now, if anyone's confused, because I know it is confusing, it's super, super simple. And I'm just going to reiterate how simple it actually is, because I know it's confusing at first, but it is basically just like locking your xLQDR. The only difference between locking your xLQDR and locking it as an FNFT is that you are getting it in NFT form instead of locking it in the xLQDR vault. Now, the FNFTs are obviously tradable. So having them in this gallery here, so once you mint your LiquidDriver as an NFT, you will be able to see it in this gallery and you can add LQDR to it. You can extend the lock and it gives you that flexibility that you can't get from locking normally. So these NFTs enable you to keep your LiquidDriver more liquid. Obviously, it's not fully liquid because there is an NFT market. So NFTs aren't as liquid as traditional. But not having to lock them up, I think is going to incentivize a lot of liquidity coming in. So it's basically just like using traditional xLQDR, but you're staking them inside of an NFT. So your yield is packaged inside an NFT and you can earn yield on that. And that will open up a lovely secondary market here. So I think this does have major ramifications for LiquidDriver. And I think it is kind of setting precedent for the Fantom ecosystem and crypto as a whole. FNFTs are a fairly new concept. We are seeing them starting to roll out now across multiple ecosystems. If successful, it will reduce the circulating supply of LiquidDriver and also increased interest on the Fantom secondary market for these NFTs, which is good for the ecosystem as a whole. As I said before, LiquidDriver is now giving you an opportunity to kind of receive multiple Fantom tokens in the form of an index fund, because they do have exposure to multiple different ecosystems in Fantom, like SpiritSwap, SpookySwap, Beats. So owning LiquidDriver, you're getting exposure to Fantom as a whole. Now, for all of you that don't own LiquidDriver, Aping is never something I would suggest, but you are in a lucky position now, and this is why I am making this video now and not when LiquidDriver was $50, because you guys are actually getting a decent discount on what the LiquidDriver price previously was. Now, we are seeing a slight uptick here, so I wouldn't say we are out of the woods in terms of getting entries on this token, but it is definitely down from its highs of 50, and these new tokenomics now with the reduced emissions are going to give you a much better look at being able to benefit off the LiquidDriver token. So my personal strategy for LiquidDriver, what I am personally doing is I will be accumulating these LiquidDriver tokens over the next few months. Of course, the Bitcoin price can come back down, so I'm not going to go too rash and ape into these NFTs now, but what I will do is take up a small position once a week or once a month over the next few months. So I'll be DCAing slowly, and hopefully I'm able to get a nice average buy price on my LiquidDriver, because then what I'm going to come in and do is stake my LiquidDriver as NFTs, just like Sounds Tricky showed in his graph. I'm going to be staking it across multiple NFTs, which give me flexibility. And what I'm going to do with these multiple NFTs is then continue to add LiquidDriver to them, because under the gallery, you can continue to top up or extend the lock on these NFTs. So I'll be adding DCAing over time to my NFTs, and I'll be earning this 75% yield on my LiquidDriver, but I'll also be getting the flexibility of being able to sell them on the secondary market. Now, not all of these changes are fully implemented yet. I just want to say this. FNFTs are very, very new. So they only launched last week. So in terms of the secondary market, it's very, very small at the moment. It is on PaintSwap right now, but there isn't many ARB opportunities because there simply isn't enough liquidity right now to be able to sustain a big secondary market. So this will take a few weeks to flesh out. You can go in and mint NFTs now. There's no issue with doing that. Just make sure you are smart with the amount of time you're locking for. If you do lock for 2 years, you will be able to sell it. The only issue is it's not as liquid. So I do recommend maybe coming up with multiple NFTs, 6 months, a year, etc., to be able to spread your risk across multiple time horizons. But that is my play with this. I think it's going to give us a great look into the Fantom ecosystem, and it's giving us a big opportunity to be able to earn yield on Fantom. I'm only showing you guys the strategy now because I think there are good opportunities in this ecosystem. It's obviously been beaten down over the last few months. And we all know with Fantom how explosive the price movement can be when it turns positive. I'm not coming on here to shield Fantom or anything. That isn't my goal here. My goal here is to present to you exactly what I'm doing. I wouldn't be sharing something if I wasn't doing it myself. So I'm coming in and I'm showing you exactly how I'm playing this ecosystem right now. And I'd be lying if I didn't say that LiquidDriver is one of the major ways that I'm playing this eco right now. The other major way that I'm playing this ecosystem is Beethoven, but it is such a big topic that I'll need to do that in tomorrow's show. So tomorrow's show is going to be absolutely massive. It'll be at the same time, so 10 a.m. Cape Town time, which is UTC +2. Or 4 a.m. EST. So tomorrow at the same time, I will be going over Beethoven because that is the second way you can earn amazing yield in Fantom. And if you have exposure to 2 of these projects, if Fantom pumps, you'll be in a very good position. I can assure you that. Have a very nice day, guys. I hope you enjoyed the video and learned something. Shadow funds are going to be massive. FNFTs are a great integration, and I'm pretty bullish on this ecosystem as a whole long term. I think there are some great opportunities here. But remember, DCA, take it slow. Don't ape into minting NFTs without fully understanding the risks, of course. And if you do those things, you will be set up for sustained success long term. I hope you have a great day. Peace out.